Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Ryan Pannell, founder and chairman and CEO of Kaiju Worldwide, Chris Donahoe, EVP and head of AI strategy at Edelman Smithfield, Laura Kornhauser, CEO of Stratyfy, and Bill Magnuson, CEO of Braze. They join us to discuss key trends that are emerging as firms rush to roll out new AI use cases and applications across their businesses. It is great to have everyone with us. Welcome to Trade Talks, and of course, AI is every industry, and we're going to have a nice mix of that here today. Let's go around the horn quickly, Ryan. We'll start with you. Tell us where Kaiju sits within the ecosystem.
We've been a predictive AI ecosystem of companies for 10 years. We've been using machine learning and artificial intelligence to manage portfolios and capital markets trade for over half that time. So I like to say long enough to have been made fun of for it. Last year's been pretty validating for us, the last 18 months or so. And we primarily focused on private fund management for most of that time. And then about a year and a half ago, we launched a fully AI curated and directed ETF.
Okay. And Chris?
Yeah, so I work at Edelman Smithfield. Edelman Smithfield is a global financial communications boutique. What we do is advise companies around their strategic and reputational positioning as it relates to seminal corporate moments. That can be M&A, a restructuring, senior executive transition, an IPO, for example. We've been very focused on AI because I think there has not been an innovation in recent history that has had such a material impact on enterprise value kind of across industries. And so it's really front and center for us today.
Yeah. And Laura?
So at Stratyfy, we're a technology company that works with financial institutions to help deliver transparent machine learning solutions that help them make more informed decisions. These are decisions like who to lend to, what to investigate for potential fraud, enabling them to unlock profitable growth, but without the risks that can come with not having transparency and how and why you make a decision. That's what we're really focused on at Stratyfy.
And Bill, Braze?
Yeah, so Braze is a Nasdaq-listed software company, and our customers are primarily B2C marketers. We're in the customer engagement space, and so what we literally do is we integrate into our customers, usually mobile apps, websites, connected fitness products, connected devices, connected TVs, et cetera, in order to provide both context and understanding about how a customer is interacting with a brand, and then have the ability to communicate with them throughout their customer journey so that you can try to drive additional, increase strength in the relationships with them, help drive additional purchases, additional adoption and affinity, avoid churn, and generally enhance retention. And so within that, from an artificial intelligence machine learning perspective, there's a lot of different facets to it. I think the things we'll hone in on today are primarily how we're making marketers more productive throughout the entire creative production lifecycle, and then similarly how we're helping enhance results by enhancing the relevance and personalization of the content that's actually being delivered to consumers.
Yeah, I mean, you can see that as a consumer. It looks very different marketing 5 years ago than it does today, but the key thing that I'm hearing is it's around predictive technologies. It seems to be what's driving the trend. So let's talk about that. What are some of the key trends that you see emerging within the brand space?
Yeah, so I think, first of all, there's a lot of excitement around the hallucination as a feature, not a bug, in order to help drive additional creativity. There's a lot of value to be gained from marketing teams by going through experimentation, by doing localization. More and more brands are multifaceted in terms of the products and services they offer, as well as much more global than they used to be. When you look at the spread of smartphones being a technology that is now distributed farther than any technology that's come before it, that means that more and more of the companies that actually that actually trade in digital goods are global companies. So the ability for marketing and just generally consumer communication to be able to adapt itself to a very diverse, very wide-scale audience has been challenged for a while. And so first of all, just trying to take what we already knew was the right thing to be doing, experimenting with different variants to see what resonates, being able to adapt and localize to different customer personas, different languages and cultures, et cetera. There's a lot of low-hanging fruit there that just needs more productivity. And so to a large extent, I think the first things that we're seeing are marketers just moving faster, being able to operate as a single person, maybe having lived one life in one country and being able to adapt their messaging to more cultures and more languages more quickly. There's a lot there around brand safety and brand voice as well, though, and so that's where a lot of the fine-tuning and the training comes into play. The hallucinations are obviously super helpful when they're trying to inspire your team, but you still want to filter those through a human that understands your brand to make sure that you're not saying anything crazy when you're ultimately getting in front of the consumer. And so in order for us to really go from that being a productivity enhancer for for a human to something that we can fully trust to run on autopilot, there needs to be, the guardrails need to be in place to make sure that that brand voice and that brand safety is being adhered to. And I think, so that's where a lot of the work is going on right now. I think that there's a lot of marketers who are still working on this. There's a lot of big marketing agencies where this is becoming an interesting question, because if you were previously billing by the hour and now all of a sudden your people are that much more productive, the work output there and the ability to actually organize and run a large digital agency or a marketing agency in a way that is maximally profitable is going to have to lead to differences in business models. And so a lot of really interesting things happening there. And I think that one of the key things that a lot of people talk about is like, oh, is this going to get rid of the jobs of marketers, or is this going to lead to this? And my own experience in seeing in so many places where there's all these low-hanging fruit opportunities that have just been sitting on the shelf waiting for the bandwidth to be able to go and act on them, to be able to do that localization, personalization. And so from my perspective, I actually think if we make the marketer marginally more productive, probably going to be more of them, because the ROI function for a brand to invest in more marketing people who are then that much more productive means that they're going to be doing a lot more of this program work. Which
is so interesting, because you have to think of it in those terms where you're playing chess and not checkers, right? Like, how is the return on your investment? How are you going to be able to invest that into your CapEx and grow the company and bring more people on? Because at the end of the day, and in financial services, this is true, well, we hope, that AI is not going to replace the advisor or the trader. You're going to make the editorial executive decision at the end of the day, which allows you to work on more substantial projects, to Bill's point.
Absolutely. I mean, that's what we're seeing with our customers. We're freeing up the lower level tasks that really don't need to be done by humans and can be much more efficiently done by machines using the use of AI and machine learning, but then ensuring that we still keep the human at the center, the human in the loop, such that in our case, you can read through anything that was learned from data, understand it, even if you're not a data scientist, be able to communicate effectively across stakeholders, both internally within your organization and also externally with regulators, with your auditors, with your customers. And we're going to just see folks getting repurposed into jobs that are more high value, that allow them to truly use their brain and less in the mundane tasks that are more easily automated.
Yeah. And well, you have interesting perspective here, because coming from a floor trader to what you're seeing now in financial services, can you almost give us the evolution of how these types of technologies have evolved the roles?
Yeah, I think it's use case dependent. So if you've got the generative side of it where I mean, that's the first time I've heard hallucination is beneficial, but I like it. That's great. On the predictive side, I mean, predictive AI doesn't suffer from hallucinations at all, because you have sort of a closed ecosystem of data. And what you're actually predating on ultimately is a human behavior that has resulted in a transaction. So if you're trying to determine what somebody's decision was externally, whether you're a fly on Warren Buffett's boardroom and you're thinking, where does that decision end up? It ends up in a trade, multiple trades, et cetera. So if you can associate the pattern, which these systems are able to identify and quantify with the behavior, you can reverse engineer the behavioral decision, which is incredibly powerful from the perspective of making an investment management decision. So I agree that we're not replacing financial advisors, because the machine really is, they're terrible at understanding context or nuance. We've seen that time and time again. And nobody wants to engage in their retirement planning with a machine that's like, I've processed you, you're a series of numbers, and here's the solution for you. But the flip side of that is you're talking about systems that are able to produce 20 billion discrete examinations per decision. Like, in the marketing materials, we have to say things like may exceed human capacity, but like, show me that guy. Like, I will hire that guy tomorrow. Whoever that is able to exceed that capacity is non-existent, frankly.
So I think Ryan hits on a good point, and building on what Bill said, two important trends I'm seeing. One is really encouraging this newfound realization that human ingenuity is the best value creator we've ever had, right? And so as we build new AI systems to help us with higher order or lower order tasks, it's doing what Bill mentioned, which is freeing up human minds and creativity and energy to these new, more powerful use cases and applications, and that's really encouraging. On the flip side, one of the other trends we're seeing this year in financial services, but I think it applies broadly, is this recognition that a good idea is just 10% of the journey. The hard part is the 90% that goes into development and implementation, right? And we're seeing a lot of firms coming out of the hype cycle of 2023 into this year, rolling up their sleeves, starting to build things and realize they have to make hard decisions about investment, costs, human capital, and things like that. And so you're seeing firms really kind of sort themselves out depending on where they land on how much they want to invest to create sort of a sustainable competitive advantage with AI, or whether they want to lean on kind of other drivers of core competency.
Yeah, well, I think another key part of that too is how are you working with brands to help them build trust and to think about the ethical dilemmas that are associated with AI?
Yeah, so at Edelman, we've been really focused on this. We've been studying what have been the drivers in trust for AI across society. And the data tells us three things. The first is that people want to know really explicitly and tangibly what is the benefit of the technology for them, for society, right? Innovation for innovation's sake is not enough. Companies and firms have to connect their innovation story to tangible customer benefit. The second thing the research tells us is that people want to see AI ethicists and digital ethicists as part of the development lifecycle, where we have seen that being transparently communicated and shared. The increase in likelihood to purchase and product adoption is really robust. And the third thing we see is like people they need government to be able to provide competent oversight of the technology as the capabilities improve. There's real questions, it seems, in society about is government up to that task? But businesses and firms need people to understand and believe the government's up to the task. And so I think as business leaders, we have a responsibility to come alongside policymakers to help build that trust in the public sector, because ultimately all parties benefit.
Right. Well, of course, particularly in the financial services space where you're heavily regulated anyway.
Absolutely, and this is why we see a lot of in financial services space, particularly where we operate lending and fraud, a lot of AI and machine learning projects fail to move from the lab into production. Some of that is for the integration challenges you mentioned and not a proper understanding of how you actually integrate the results of a machine learning model or decision-based strategy into your workflow. But a lot of that, again, comes down to a lack of understanding of the technology, a lack of understanding of how it's working, which then leads folks to be fearful of relying on it and using it internally. But again, the external pressures in the spaces we operate in, kind of sort of knowing how a prediction was made or a decision was made is just not going to cut it. And with the increased pressure from regulators, increased regulatory scrutiny, and we expect increased enforcement actions to be coming as well, financial institutions have to be prepared to fully explain how predictions and decisions were arrived at, how you made a decision to extend a loan to you but not to you, and have a really granular understanding of why that happens, and importantly also be able to change those outcomes for situations like when your data is biased, which is in almost every single situation, to be able to compensate for that bias in the data so you're not just embedding it in a machine and then propagating it forward with greater speed and greater scalability.
Yeah, well, I mean, it's part of the challenge. It's very subjective as well, right? Who considers what ethical, data in, data out? That's, to your point, it's always good. So when we think about content moderation, right? It's very subjective at the end of the day.
Absolutely.
Especially with no guardrails.
Yeah, and I think, in our space, one of the interesting things is a lot of people look at marketing technology and they kind of munge it together with advertising technology, which the key distinction, I think, being that within the marketing technology space and where we operate, you're in a first-party data universe and you're with a first-party relationship. And so, to have targeting on a billboard out here or something like that, if you walk by that and it's not personalized to you, you're not that bothered by it. But if you're like literally in someone's inbox or you're in their phone or what have you, and you're modifying content, and you're doing that either with data that you shouldn't have had access to because you went and bought it from a data broker, or it's data where you're mistaking someone for their household because you drew something from their IP address, but it was actually their daughter or their grandfather in another room on the same Wi-Fi network or what have you. That starts to then leak identity through those places, and there's a lot of those types of missteps that we're all very used to from the advertising world. And I think one of the interesting things about the space that we're in is that we've tried to ensure that we move the mindset away from being like a creepy detective trying to find out everything about you to just being a good listener. And I think that when you're in the first-party universe where we're integrated into the apps and the websites and the general kind of product and service digital ecosystem, you have access to a tremendous amount of data to be able to understand those customers and be able to find the right patterns and such. And if you've got really powerful pattern matching technology that's able to go and find those connections for people, you need to make sure that the data inputs that you put in are ones that that customer was aware that they shared with you. And I think that just that attitude of being able to say, hey, I'm going to be a good listener, because if I'm a good listener in a conversation, in a relationship that you've opted into, and we are actually just kind of communicating back and forth, then when I personalize things, that's just me, like, you know, caring about you having a good time in this conversation and there being enhanced relevance. Whereas, like, if I show up and I know things about you that you would rather I didn't, right? Like, that's a completely different reaction that you're going to have. And so I think for us, it's like, hey, let's go and free ourselves to use the most advanced technology to be able to work on this by just making sure that the data inputs were respectfully and transparently acquired in the first place.
So Ryan, let's talk about that as it relates to trading. How can the industry build investor trust and manage trading risk with AI?
Well, I think there's two pieces to that, and the regulatory piece plays a big role, right? I mean, we've seen this recently. We've talked about this repeatedly in media cycles. You've got a substantial lag when it comes to legislation and regulatory evolution with a technology that is just not moving slowly at all. And so you have a scenario where companies like ours may want to distribute our models for third-party validation. You know, let's increase transparency. Have a third party have a look at the science behind what we do. But from a regulatory perspective, that falls into the same bucket as a quantitative back test, which is not disseminatable, it's misleading, and therefore you're literally prevented from sharing the thing that would immediately build investor security and trust. So that's one issue. The other side of it is, you know, by greater education with people in terms of how you're making the decisions that you're making. Like, these aren't black box systems. These have rules. They have guardrails around them. I mean, you know, you have niche shops like Renaissance Technologies who've been doing this for 30 years, and that's, yes, exclusively black box. Connectivity to capital markets or asset classes and just go make money. But that's not how most of us use it. Most of us use this around specific trading ideologies that come from the traders in the first place. You know, experienced traders and experienced investment managers teach the team, teach the machines improve that trading strategy, and then can use that, you know, more reliably, more efficiently, more effectively. But that's not really being communicated. It's just this sort of, you know, shadow curtain around everything. And it's like, well, I don't really trust this machine because I don't understand how it's doing what it's doing. You know, humans, we make these investment decisions along a linear logic path, right? We intake information, we perform our own investment analysis, and then we come up with a buy, sell, yes, no decision at the end of the day. And AI doesn't do that. AI tends to make decisions all at once, in just the entire market at the tick level, and all at once says yes or no to that. We find that very disquieting, despite the fact that we do this with every aesthetic decision you've ever made. You see a piece of art or a person or a car or a house and you say, oh, that's gorgeous. If I stopped you in the moment and I said, interesting, why? You would back out of that, you'd stumble around, you'd try to articulate it, and you'd probably be mostly wrong in your articulation, but you knew it instantly. And so AI does that with these type of investment management decisions all at once. But the lack of explainability is what's an issue for us right now. I don't understand why it picked Disney over Chipotle, because a preponderance of criteria was weighted favorably this and the other. And we have a problem with that. So I think, you know, if we can analogize this better, point out these ethical way, or sorry, not ethical, but aesthetic way that our brain makes these determinations, and that this is similar in just a different way, but not less accurate, then you can increase investor confidence there.
Yeah, I mean, that was, I feel like I just went to school with that explanation. that was a great explanation. So we could go on all day with this, but Chris, let me give you the last word here. What does the future look like in terms, like, how are you advising companies to think farther ahead? If guardrails aren't in place, since technology is moving, we all know Moore's Law, where, you know, each iteration of technology goes way faster than the other one. How should they be thinking about it as we move forward?
So I think there's a few things to keep in mind. First is you need to be working and playing and experimenting and building, understanding how these systems integrate and layer on top of the business strategy you're already executing, right? If you're doing that today, you're going to be positioned well. if you're not doing that today, and if you're not building even a base level of fluency in your workforce as it relates to AI, it's going to be really, really hard for you to catch up even 1 to 2 years down the road. You might be able to do it, it's going to cost a lot more money. The last thing I want to hit on is we've touched on it a few points here in the conversation, this distinction between predictive AI and generative AI. They have pros and cons, different use cases and the like. I think coming down the road, you're going to see this increasing unity between those universes. And I don't think most people, including policymakers, just understand how tremendously powerful those unified systems are going to be. And I think I'm really encouraged to hear the folks around this table working on that. And I think it's a conversation we need to continue to have.
We certainly will on Trade Talks, that's for sure. All right, appreciate it. It was an insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you.
Thank you.